Hey traders, Raghee here. Let's get a quick audio and video check in. Should be good to go. All right, happy OpEx Friday, everybody. Here we are. We've been talking about this for a little bit now, a couple of weeks, gearing up for the big triple witching. So every third Friday of every month, right? Every third Friday of the month, there is options expiration of the monthly variety. And then every quarter, so this is December, March, June, and yes, now September, we have the quarterly expiration where the futures expire. There's three groups of asset classes that expire today. Futures contracts are rolling. Those options are expiring. We know that stock and ETF options are expiring. So it's triple witching. And ultimately, when we look at something like triple witching, we know that there's a lot of money that's set to basically, we could exercise options. The options could expire worthless. We're going to see traders move from this September 19 expiration out to the October expiration. So we're going to see a lot of migration of the activity, right? Selling options, buying options, moving out to the next month, and even potentially out to the next triple witching, which is in December. So that's where we are right now in terms of the calendar. In terms of our trading, we know that this is a great window that opens for us in terms of movement that no one's saying it's a certainty, but there's a high probability that price action could gravitate towards these high open interest levels. And there's no hot zones pre-market, and really there's no hot zones other than FOMC daily at 2:30. OpEx should really overshadow that. We know it's a caution day for day trading, much like Wednesday was for Powell and the FOMC rate statement and press conference, but we will look for some opportunities for some day trades. We're going to mostly focus on those high open interest levels that overlap with the DPMR, the wave, and the Darvis. So those are our three core setups. Three things I'm always looking for a swing trade is price action at a Darvis level, or that lower eighth of the Darvis. Is it in a DPMR zone? And does it have a trend? Therefore, we can look at the mean reversion. Yeah, quad witching was a thing for those of you wondering, why not quad? Some people still call it quad, although it's not really true anymore. Once upon a time, there were stock futures. That was the fourth element. We know that never really came to anything. So it's really not quad, it's triple. But you might have heard people in long back in previous years call it quad, but yeah, it's triple witching. So those are the three asset classes that are expiring. So that is where we are. It's a caution day. Now, some things specific to our current book. All right, so what do we have going on right now in the Sector Secrets Mastery? Right now, we've got the open IWM calls. Those are, if you recall, we alerted those out on that very brief window of Wednesday after Powell finally stopped talking at that press conference. In fairness, he was answering questions. But when he finally stopped answering questions, he kind of mic dropped. We saw that the Russell was in the daily price movement range, and we played that very small window between that Wednesday afternoon to today, Friday morning. And lo and behold, the Russell is at all-time highs. So I do want to see how much more juice is in this squeeze of orange, right? I love orange juice, right? And so if we're taking a look at how much more can we get out of this thing, we're going to see this expire today. But if we can see a little bit more follow through this morning, that'll be our time-based exit. That's the T3. We can tighten the stop, which I will do this morning, probably after the clearing period, and we'll see how much higher is high. Remember, having hit two targets on that IWM, I sent out the recap yesterday. Having hit that, this is definitely a 100% winner. And now we want to see if we can get a little bit more out of it before we go to the next trades. Maybe an IWM after a pullback. Certainly not at these all-time highs. All right. What else do we need to be aware of? Let's talk about our problem child. We could talk about winners. Yes, we've taken winners out of URA and Barrick. But what about GDX? We're going to have to keep a close eye on gold and GDX as we go through the morning, because look, if GDX just finally hits, I have 2 entries on GDX. I scaled out of the 350 entry because I couldn't, really justify, based on the math of our risk, holding it any longer. But I do have the 335 entry on those 68 calls. Let's see what happens, right? That's all we can do. So for those of you that closed out GDX in its entirety, that's fine, because remember, Barrick is a winner, and Barrick is what, the number 4 weighted stock or 3 weighted stock in the gold miners. So, if I have to go 3 for 4 for the week, that's not an altogether terrible thing, especially with the way URA and IWM are moving. All right, so let's take a look at URA. Sorry, my eye has still been acted up a little bit. All right, hang on one sec. Let's clean these glasses up. There we go. So let's see what we've got here. Let's take a look at URA. I like this uranium play. Remember, we went with the sector, not the individual stock. We went with the tide, not the boat. There are some great boats in the URA ETF. There's so many of them, it just made sense to go with the tide, which allows us to take advantage of so many of the individual stocks. But we'll probably stick with this sector going into next week and maybe later today, because it's showing signs on the daily time frame of turning into an uptrend. All right, cool. So there's that. All right, so watching GDX closely, URA and B are at break even, and let's see how much higher we can get out of those September 19 IWM calls. All right, the bell's going to ring in about 3 minutes, and I need a sip of coffee. And right now, we know that the indices are above the previous session close. You'll take a look at the ES here. We have an uptrend on the S&P 5-minute chart. We have an uptrend on the daily too, by the way. We have an uptrend on the NASDAQ. Not as good, not as solid an uptrend as the one on the S&P. If you take a look at the chart here, take a look at the multi-structure down here. I'm going to highlight it. Right down in here, you see how it's kind of got some fits and starts? So see the smoothness of the ES by comparison. All right, if we take a look at the Dow, also moving higher. So this is a pretty good day for maybe some ES. One of the things that I get emails on this from time to time, because it still does seem to be a fairly popular thing, which is just sort of this intense focus on S&P trading, whether that be futures, whether that be SPY, or whether that be SPX. So in the coming weeks, probably starting, I'm thinking maybe end of next week, or I'm trying to think when I'm going to do this. But I thought, we've done a series on maybe the beginning of the last week of the month, the 29th. I'm going to walk y'all through I'll walk y'all through, and we'll do this over the course of a couple of weeks, how I trade the S&P. I mean, there's really 3, maybe 4 ways to do it. And how you can trade any kind of S&P contract, SPY, SPX, the micro, the mini, the options, by focusing on ES futures, but under certain conditions. So we'll talk about that, because I think a lot of folks still really love the S&P, but I got to mention, sometimes the S&P isn't the best contract to trade. I mean, right now we're in a killer trade on the IWM. So while I don't want to put a disproportionate amount of emphasis on that, I'm happy to share that. And I'll put that on my YouTube channel, probably starting in about a week. And I'll go through I'll go through a series for 3 or 4 weeks and give you all a lesson every week. So if you haven't already subscribed to my YouTube channel, it's YouTube, search my first and last name, Raghee Horner. It's YouTube at Raghee Horner. And once you subscribe, when those start going live, you'll get notified. Okay, so then there is the index question. Do I want to buy the indices today here on OpEx? Well, if they pull back, I would have to say I'm open to it. Our strongest index is probably a tug of war between S&P, NAS, maybe Dow. Russell's still pretty strong, but believe it or not, it's the least strong at the moment relative to the other 3. Even though it's at all-time highs, it's made a huge move for us. We'll keep a really close eye on it. What would I be looking for on the pullback, right? That's another big question. What would I be looking for on the pullback? So indices are above the previous session close. I'll be ready for the candle of unusual size at the bell. We know this is very common. Yesterday, I mentioned that, hey, between 9:30 and 10 o'clock, the volatility that happens there during the clearing period is not necessarily indicative of what the market's going to do the rest of the day. So if I see this big down candle on the Dow or on the Russell or on the S&P, I'm not terribly concerned about it. This is, obviously some sell orders hitting. They're clearing out the orders. And ultimately, what we want to remember is this could be just a very temporary thing. And also volumes coming in. The spreads are narrowing, all that good stuff. All right. So that's the plan there. So we're ready for the candle of unusual size, which we're getting right now. I'm not going to sweat that whatsoever. Some of this could be pre-market profit taking. This could be, who knows? Any number of things can happen where people want to either buy or sell at the bell. And when we've had a ramp up the way we've had, it's not going to surprise me if we see a little bit of selling. All right, so let's start filtering for our day trading setups. What has a trend? Let's start there. What has a trend? And we make this really easy with the multi-structure at the bottom of the chart. None of the indices now have a trend. They're bullish chop. The Dow and the Russell, okay, so what is above the previous session close, the 4 p.m. cash close? That's the next question. Those two questions alone are going to lead us here at 9:31 to focus on the NQ of the four indices. Now, one of the things that S&P traders tend to forget is that the S&P is never the captain of its own ship. It's going to move a little bit like the Nas. It's going to move a little bit like the Dow. And if the Dow is moving lower and the Nas is holding, we're just better off trading the NASDAQ, right? We could use the S&P as a proxy for the Dow, meaning it's going to do something very similar to the Dow, but because of the NASDAQ strength, it's likely to be more resilient, right? Those are all things to keep in mind. The next thing I'm going to look at, all right, so I'll keep an eye on the ES and NQ, but in that order, NQ and ES. And then I'm looking for the three core setups. That's all we need, gang. I think in a world of people having so many patterns and so many setups and so many zones and all these very manually drawn things, at this point in my career, I don't do anything manual. The most manual thing that I do is I cut a range in half manually, right? Which anybody could do. That's on a high skill requirement activity. So if I can look at the top and the bottom of anything, it could be support and resistance, it could be our Darvis, it could be our DPMRs, it could be our HPMRs. You can cut a sandwich in half. You can do the most manually draining thing that I do in trading, which is cut a range in half. So that's all you'll see me do manually. That means our core three setups are based on automation. This is so huge, gang. We have these great platforms with amazingly robust coding, and anything we can imagine as far as criteria, pretty much we can somehow program into our platforms to tell us, hey, when this criteria is present, color a candle, give us an arrow, plot a dot, do something, right? And that's all up to the programmer and us to determine. But we automate everything. So we automate the Darvis. That's one of our core setups. We automate the daily price movement range or the hourly, right? I'm going to keep an eye on all of this today because it is triple witching. And we automate the wave, which is the mean reversion. And that's all I'm looking for. That's it. So in a world of more and more complicated and more setups, whittle it down to three. One of my mentors used to always say, you're one setup away from turning the corner, just one setup. If you can find that one setup that's the touchstone for everything you do, and then you maybe add one or two more to that, that's a career. You don't need more. You don't need more than three. All right. So then the next thing that I'm going to look at, and by the way, what I'm running on the screen, of course, is the top tier platform, which is the evolution of the tops. Tops are great. If you're using the tops, no problem. You're probably going to get a slightly different reading on some of your charts, but the overall gist, the overall psychology is pretty much the same. So what do I have on the NQ here? I am looking at this NQ, and there is an interesting level right there. You're at 935. NQ, let's keep an eye on that level of the automation of the Darvis, see right there? And that's sitting at basically 24,734. All right, let's do the same thing for the ES. And I'd be looking at, so we're right at the previous session close, which is a little bit of a challenge here, right? We know there might be something there, but I'm going to pass on that. If I had a complete signal or read on the oversold of this current chop, that might be tempting, the previous session close as an entry, but I'm going to pass on that. And I'm going to be really cautious because this is where S&P traders get themselves in a lot of trouble. They forget to look at the Dow. The Dow is moving lower, gang. The Dow is absolutely moving lower. That's going to pull on the S&P. It's going to prevent it from moving with the NAS as well as it could. So let's stick with the NAS if we're going to be bullish here. All right, let's stick with the NAS if we're going to be bullish. Now, is there any early sign of strength in terms of sectors on the NAS? Yeah, we might want to keep an eye on XLK, and we might want to keep an eye on XLY. So this is Amazon. This here is basically your Amazon, Tesla group. XLK is your NVIDIA, Apple, Microsoft group, both heavily weighted in the NASDAQ. As far as trends go, so far this morning, go figure. Healthcare is in an uptrend. What else? You're at 937. Metals and mining are in an uptrend, which, by the way, is great for our GDX and our Barrick position. GDX intraday, it looks like it's in an uptrend. So this is looking very good for those open positions that we still have. Yeah. So Barrick, remember, those are October expiring options. So I don't want to be in a huge rush to scale out of these again. Remember, this is not about an OpEx issue. This is really, hey, can I survive OpEx and keep this particular trade going, right? And we were just talking about Barrick and how it was just boring for what, 3 or 4 days. You know, we got in and it did nothing, but it did not stop us out, and it didn't hit the target either. So here's a great lesson in, unless the trade is taking you out based on our plan, just be patient, and all of a sudden, there's your move. So this is fantastic. This is one of our oldest swings that we've had on, and now Barrick is just, you know, obviously been shot out of a cannon, and then this is going to take GDX with it. Now remember, on that GDX trade, for those of you that had probably fills of 335 or less, so someone mentioned they had a 330 fill, someone had a 305 fill, right? So depending on where you are with this particular trade and managing the risk of the pullbacks that we've seen, remember that Barrick does have an initial target of 20, no, what was Barrick's initial target? 20, yeah, I think it was 29.50, right? 29.50. And then if you want to know what T2 is, I'm going to wait, gang. If a stock wants to run like this, T2, by the way, T2 on Barrick could be 100% return. And I'll mention that in a minute. Let me go back to GDX for a moment, because I kind of am mixing the two because they are so similar. So on GDX, our T1 is 70.50 or 25% premium gain, right? So if you're looking at your GDX entry, and my entry was 335 and 350, I had to cut the 335. So 350. So I'm left with the 335. Where's my darn calculator? There it is. All right. So do some quick math. GDX 335 times 25%, increase of 25%. When this thing is trading at about 420, there's my target, right? And on Barrick, yes, so for those of you that are looking at your Barrick right now and thinking, Rog, do we have a second target? Remember, as a general standing order, and I sent this alert out yesterday, T2 can be a price, but T2 can also be 100%. So I paid $1.75 for Barrick, and then once it doubles to 350, then it's definitely fair game for that T2, that optional T2, when we don't have a price level that we have identified as a scale out. And those October 17 Barracks, and that's the 28 call. Right now, those are trading at, survey says, 387. So there you go. All right. So that 100% optional for the second target is absolutely fair game. Now, remember, if we're risking on average 15 to 25% of premium gained, and now we've got 100%, this is where you can grow an account really exponentially. So if we're not using 100% risk, which I don't, max debit, we can be free to scale out at 25, 50, 100%. Now, remember, if you're using max debit of 100%, your reward has to also be 100% to have a one-to-one risk reward. So keep that simple arithmetic in mind. All right, so Memray, you went 165 to 390, beautiful, Yahtzee. Digger, 184 to 370, beautiful. 118, already peeled out one off at 100%. Awesome, excellent. Okay, so remember, our GDX can be 25% or that first target at 70.50. Right now, the GDX 17 October 68 calls. Let's see where they're trading at. And then right now, gang, I'm still waiting on a day trade. I don't see a single thing. And it's a caution day anyway, so I'm not going to be surprised, but we might start adjusting to swing trading a little bit quicker than we normally would. So GDX, taking a look at those 68 calls for 17 October. Those are trading at 370, gang. So I'm not quite there, am I? I'm not quite there. It's 20%. It's above where I bought it, which is nice, but it's not quite where it's 25%. So it's still kind of it's been our problem child, hasn't it? But remember, if we cut our losses quickly and small paper cuts, when we get the moves like we do in IWM, when we get the moves like we have in Barrick now, let's go take a look at URA. What's that thing up to? Now, remember, if the Dow's weak, URA is going to have to work a little harder, but URA is off to the races. Beautiful. So this is our URA position. Remember, we've got those 17 October 44 calls. We've already scaled out of them once. I'm going to be very patient about the next scale out. And I don't want to scale out a URA again until personally I'm at least at about 4.5, 460, maybe even $5 on those 17 October 44s, right? So 17 October 44 URA right now is at 370. So I'm in no rush, gang, to scale out a URA. Again, I love what it's doing, but it's either got to hit a T2, which could be, say, 47.38 today, or I'd love to see 100% premium return on the second target, right? Because we've done our job. The job of the first target is risk management. How do I transition to risk to my account, meaning my money, to only unrealized gains as risk? And that's why that T2 and having a prudent T2 is so darn important. Yeah. All right. So that's where we are this morning. OpEx is going to mean looking at gravitational pull to those high open interest. May not be in the morning. Remember, it's got to be there by the close. So a lot of that OpEx influence happens usually the second half of the day. I'm open to a pullback on the NQ. I'm open to a pullback potentially, not favorably, but potentially on the ES. NQ looks a whole lot better, but we might have some setups here for gold, perhaps. ES and NQ, we'll take a look at the stocks within some of the strength sectors. Right now, we're left with only, here at 944, Isn't this interesting? Only XLV still has only, wow, okay. So we'll go take a look at things like Johnson & Johnson, UNH, Merck, Abbott, things like that. So only XLV has the uptrend. And look at how important it is to give the market about 15 minutes. To give the market about 15 minutes to sort itself out. 5 to let the candle of unusual size happen. 5 minutes just to let that volume and the spreads normalize. And then 15 to really get an idea of what are we really in store for here today. And then after 30 minutes, you'll see a lot of times it's a very different, it's an abrupt shift. So we have a brand new level on the NQ. Let's start taking a look at this for a potential Darvis entry. Long QQQ calls around 24,737.5. And that's what we've got here for the morning, gang. So let's get on to work. Okay, so